Decentralized finance, or DeFi, has been gaining quite the buzz lately among those looking to make money with cryptocurrency. While it might seem difficult to understand at first, especially with the many decentralized finance platforms out there, the concept behind DeFi is relatively simple and easy to grasp once you get down to it. In this video, we're going to explain how to make money from crypto, but this time with the least amount of risk possible. It'll also involve something so new that the hedge funds haven't picked it up yet. This new thing is called DeFi. Decentralized finance, also known as DeFi, refers to the ecosystem of decentralized applications that enable cryptocurrency holders to invest and lend without going through any central entity, like a bank or brokerage firm. This way, users can take advantage of the new opportunities made possible by decentralized finance without needing to trust anyone else with their money. With DeFi, your money will be safer and easier to manage than ever before, and you'll be able to make money doing things that you might not even been able to do before. Before we continue, I just want to mention this first since I want to stay out of the hands of any lawyers. I want to clarify that this video is in no way meant to be financial advice. This video is simply to educate viewers with the information they may not know. All I'm aiming for is to provide useful light for you and me as we enter this unfamiliar world together. Initially, many people believed that to make money with crypto, they had to first buy it and then sell it. Buy low, wait for Elon Musk to tweet about it, and then sell for a profit. This is kind of depressing, because many people will lose money if they choose this route. I am also sad because there is a much better route out there that requires you to be introduced to it, and then you'd be amazed. Let me show you what I'm doing with crypto. This is how I'm making money right now. Even if there's a sudden 50% dip tomorrow, even if there is a dip, I'll be able to make even more money. It's time to dig in. Before any further, it's important to note that DeFi encompasses more than just the use of cryptocurrency and blockchain. It also includes everything from digital wallets to smart contracts to lending platforms. Starting off, the first way to start making money in DeFi is by lending. Now you're probably thinking about how this means lending your cryptocurrency to other people. I am already aware that there are many BlockFi referral links all over the place. I understand that this is not decentralized finance. Indeed, this is CeFi. DeFi stands for decentralized finance, which is a rather tricky way of saying it is not controlled by anyone. You can easily withdraw and transfer money whenever you want to, and you can do it all on your own. This makes it much more decentralized than banking institutions. This will allow you to lend out money at interest rates that you set. If someone borrows from you, they will pay interest based on what they borrowed, and when they pay back their loan, they'll get their original funds plus interest. This means if someone borrows $100 from you at an annual interest rate of 10%, then after a year, they'll owe you $110 back. If you use BlockFi, you're actually giving them your crypto, and it's their job to withdraw it from you, but it's still important to wait for a minimum of 24 hours to provide oversight. Notwithstanding, the current rate's at 7%, and with those, you might as well just invest in the stock market, right? In addition, I've noticed they've been lowering the rates. You probably see them everywhere on YouTube because they offer an affiliate bonus. That or they don't go over 30%. If I were BlockFi, I would invest your money in these high interest-bearing platforms and give you back the difference plus a makeup. Again, I'm not accusing them of doing this, but I would if I were in their shoes. Allow me to provide you with more details about how this works. One of the benefits of borrowing with true DeFi is getting higher rates. Therefore, DeFi probably always has higher rates than traditional finance. One of the biggest reasons is who is eligible for DeFi. For example, our grandma can walk into a bank and say she wants to save some money and earn interest, but she can't set up MetaMask or deposit her money into a custodial account. One other important reason is that much capital is going into decentralized crypto-related investments. As more money flows into it, some of it has to find its way into the money market. Later in the video, we'll be discussing what I mean by people giving out money for free as a side topic of my arguments here. DeFi generally offers about 30% APY, which is much higher than bank interest rates, but some projects offer as much as 100% interest just for lending out your tokens. This means if you have $100 worth of ETH, you can lend it out and earn $100 price of ETH back. This is obviously not sustainable because there are only so many people who will want to lend their money at such high rates. Still, if you're an early adopter who wants to get involved in DeFi before everyone else does, these deals can make sense for you. Before we go on, consider giving this video a thumbs up and subscribing to the channel if you are enjoying it so far. Next, one of the reasons I enjoy using decentralized finance is that it gives me control over my money. If I deposit my money with BlockFi, it owns my money. Legally, they could pass it on to another company in a different country, sue the US, and declare bankruptcy. Then, a guy on a yacht might be smiling as they recoup their crypto stake of $100 or so. So as long as you don't give away your private keys to anyone else, the only person who can withdraw your funds is you. As such, governments can't step in and simply say they're taking your crypto unless they force the private key out of you. There's nothing they can do to obtain it. In addition, I can lend out my own money to people who have a use case for decentralized finance without compromising my financial privacy. Instead of giving away my identity to an institution or business, I'm lending it out to people who need it in exchange for financial gain. This is important because decentralized finance requires more protection of your personal data than traditional institutions. The same isn't true in traditional finance if you're willing to break bank laws and risk being punished. Along with low interest rates and 100% control over your funds, the other thing that makes DeFi safer than other lending platforms is, 3 advantages of crypto lending and loan borrowing are, it's collateralized. You would know all about 2008. That year we had a crisis. This is to say, people were taking out loans they knew they couldn't repay. To put it bluntly, this is not possible in the crypto industry. Point is, every crypto loan is secured for an even more technical reason. They are what's called over-collateralized. This might have you wondering what this means though. Thus, if you want to borrow $100 worth of Ethereum, you need to put up an initial $120. This way, if prices on a new home go down or someone doesn't pay off their mortgage, the lender can take the initial deposit instead. If you continue to borrow more than you can ever pay back with the same amount you loaned, you'll be liquidated. This means that you'll only be able to keep the amount you borrowed from the initial investment, but will need to return the remainder to the lender. We do not wish to run this risk, so it's imperative to invest some money up front in order to maintain a safe business. Now you might ask yourself, why would you need to deposit Ethereum just to borrow USDC? The answer is actually quite simple. It might be because you want to buy Ethereum and borrow USDC. Basically, you're creating a leveraged position by either borrowing Ethereum and investing in USDC, or by using USDC to purchase Ethereum. Anyway, it means that, for us lenders, we make money for the rates that the borrowers pay us, and the risk is minimized. However, this may be too confusing if you're new to this, so let's move on. There are actually 2 DeFi lending applications, called AAVE and Compound. After lending comes providing liquidity. Generally, it is a little riskier. First of all, let me explain what that means. Previously, when we sold stocks or bonds to customers, it was to literally match a buyer with a seller. For instance, a buyer puts up an order to buy 10 pairs of stocks for $150 and just has to wait for someone to come to a mutually agreeable agreement for sale. Smart people have figured out how to harness the power of code and programming. And in the world of DeFi, we have adopted a specific set of algorithms. The crypto world uses fund pooling. If you want to make a trade, you head to the pool of funds asking, do you have this much money? How many tokens do you want to give me? It then does some calculations and tells you that you can either agree or decline. Still, the big question is, how do you profit from this? Here's how to do it. Every trader who uses the pool to execute a trade pays a fee, and the money that goes to that pool will eventually get handed to you. You'll earn money, which is really quite similar to the process of lending. Well, this video has covered a lot of ground, but there are still many things that you might want to know about decentralized finance. In the second part of this video about making money in crypto using DeFi, we will explore more about providing liquidity, our favorite incentive, and so on. The link for part 2 is in the description below. Don't forget to like this video and subscribe to our channel. See you in the next video. Click here to watch.